And head over to Larry Shover, Chief Investment Officer at SFG Alternatives in the United States now, for his take on the markets today. And first of all, Larry, I want to ask about the reaction down there to the fake tweet. So the reaction down there at the floor of the CME Group in Chicago. And how long was it until people realised it was incorrect?
Yeah, well, good question. I mean, again, people are saying, here we go again, another glitch, another who knows what. It took about 3.5 to 5 minutes before people figured it out. And typically, and sadly, we're just getting used to these sort of things where we have glitches in a system or flash crash or terror tweets. And people basically just put their hands in their pocket and just wait to see what's happening because no one seemed to know what to do. And yeah, it took about 5 minutes before things came out of what happened.
Is there any chat down there about potentially who's behind it? I've seen rumours that it could have been to do with trading.
Yeah, you know, I think traders like myself have been down here for almost 3 decades now. Again, we say that this is the reason why you should have a trading floor. I mean, it's like a computer trading is all good and great, and it definitely served a good purpose. But again, having a trading floor makes a lot of sense. And beyond that, people start thinking like, well, gee, maybe news services shouldn't be on Twitter. Maybe they shouldn't be tweeting things in social media because of something like this.
Yeah, I guess, though, hackers could find possibly another way to get around that through the Newswire service feed themselves or whatnot. But it's interesting you say that about the trading floor. I've seen that brought up a couple of times this morning. We don't have one here in Australia. We don't have a live trading floor. But over there, this is really when it comes into play, isn't it? When you need human instinct to kick in and bring a bit of scepticism to the moves.
That's exactly right. And I do remember when Australia did have a bigger trading floor, but it was never that big. So the culture is just different. But yeah, I mean, there's still a lot of people down here that make a living trading on the floor. And it's just really just disgusting that these sort of things happen. And again, it just compromises the integrity of the entire market. I mean, rumors and bad things happen when traders are involved as well on a face-to-face, hand-to-hand basis, but nothing of this magnitude.
Larry, let's go to reporting season because I know you're watching the industrials and the materials particularly closely this season, more than any other space. Why is that?
I'm watching it because there's a lot of questions. I mean, we have disconnects in the market. Like, why is the stock market rallying? Why are commodities going down? Why is the stock market rallying? Why is energy going down? That typically doesn't happen. It should raise some red flags, and it surely does for me. Are we just cooling off growth right now? Or, like I said last week, that Australians don't know, is this going to be a spring swoon where we're going to have a big correction in the market? I mean, something's going to have to give. This morning and last night, you know, we had global flash PMIs come out from China, Europe, and the U.S., all suggesting that we're all in the cool down camp still. The U.S. is growing at about 2% right now. That's not really growing. So that's the whole thing right now that I'm watching.
What about gold? We're seeing some heavy volumes in the market, physical demand coming back after last week's plunge, but investors still pulling out of those ETFs overnight. What's your outlook?
Yeah, my outlook is that in a balanced portfolio, you do have to have gold in there. I do make a really strong case where at least it should be in a sliver of your portfolio. My target for the end of the year is still $1,500 an ounce, and it's really solely based on the fact that here in the U.S., we have a $3.2 trillion balance sheet that nobody has managed before. Nobody's unwinded this thing before, and now we have the rest of the world joining in with Japan with their unlimited amount of cash trashing right now. So for that alone, I would own gold and perhaps hope you're wrong, because that would mean everything else as well.
Yeah, we know that the yen weakness is driving much of the market at the moment, Larry, but when will investors start taking advantage of the interest rate differential? When are we going to start seeing that carry trade come into effect? Because it hasn't seemed to yet, has it?
No, it hasn't, but like on the not the investor level, but the institutional level, we definitely have seen the carry trade with the currencies like the euro currency, the Swiss franc, even the Australian dollar to a certain point. I mean, I think people or the market needs to get more, I guess, more feedback, more justification that Japan, in fact, is going to continue to debase their currency, keep 10-year yields at 55 basis points, where that interest rate differential does make sense. And it's funny that in the U.S., we're not talking about that a whole lot. And really, I think that's creating a lot of something that Mark suggested. It's creating a lot of air pockets or potential air pockets in our market that we're not even looking at right now, especially when you look at sovereign yields. I mean, right now we have Spain 4.25% for a 10-year yield. I personally think that's all to do, or most to do, because of what's going on in Japan, the JGB, and the weak currency.
Okay, Larry Shover, thanks so much. Talk to you soon.
You're welcome.
Got to take a quick break. When we